Now, as mentioned, U.S. markets are rallying after today's CPI data showing inflation cooling somewhat in the United States. We're joined now by Justin Elliott, portfolio manager at Caldwell Investment Management. You're going to help us break it down. Hi, Justin. Thanks for being with us.
Hey, Mark. Thanks for having me on.
Now, first off, I understand that you're looking at potential tariffs from the U.S. and the America First policy under Trump. That could help small to mid-cap stocks. Why is that?
Yeah, so, we think the potential for tariffs could mean higher for longer inflation, but the offsets are potentially more relaxed regulatory environment, more M&A, and lower taxes. And so there's been a lot of talk over the last year or two about the concentration in market returns and sort of the valuations of big tech and mega cap companies. A lot of those companies, though, have been driven by earnings growth rather than multiple expansion. So when we kind of look forward, we think on the big tech side, mega cap side, when you have a more relaxed regulatory environment, that's going to lead to faster and greater innovation. And Trump does see the importance of U.S. tech in contributing to technological and kind of global competitiveness of the U.S. So we think he's going to make things easier for those companies to flourish. Now, on the small mid-cap side, to answer your question, those companies, while inflation may be an issue kind of on the supply chain side, we think the America First attitude and lower taxes is going to be great for companies that have a little bit more of their U.S. both supply chain and revenue exposure concentrated within America. And so we think there's the potential next year for big tech to continue to run, given earnings keep growing and they meet expectations, and we see broader participation from small and mid caps, given some benefits from taxes, those things like that.
Now, Justin, you were hinting at it there. You believe that artificial intelligence will continue to be a major theme, but one area you're looking at are so-called AI adjacent kind of companies, ones that play into the data center boom, let's call it, and also the energy expansion. So do you have any names in that area for us, and can you sort of back up your theory?
Yeah, so data centers house all the AI chips and servers that make all of this possible. So obviously a very key component to driving this forward. And we like companies that are enabling this more so on the engineering and construction side. So companies that are basically laying the groundwork for how we develop these data centers, the whole build process of how they get built and how they're connected to the grid, for example. A company we like, for example, is Fixed Comfort Systems. So they do a lot of the mechanical, electrical, and kind of heating and ventilation for data centers. And that's been an extremely high growth market for them over the last couple of years, just given the demand we've seen from obviously a lot of the hyperscale cloud providers. Another would be power or Quanta Services. And so they're sort of in charge of connecting these data centers to the grid and providing electricity to the data centers. There's a stat that was just released that the electricity demand from data centers could grow over 3x from 2023 to 2030, given the current trends that we're seeing right now. So we think there's kind of a lot of growth left in that area. And these are kind of more stable long-term projects where companies have good visibility, and we should see kind of a nice steady earnings growth profile over time.
Justin, you've got three other names for us. Let's roll through those. They're all quite different, starting with Meta. What do you like?
Yeah, so we also see Meta as an AI play. They've been investing in AI really to help their own content algorithms. So they've seen a big benefit in terms of driving user engagement on the platform. And what that does is it opens up more spots for advertisers to come in and advertise. But they've also increased the targeting of their ads from the advertiser side. So they're generating basically a greater return on ad spend, and it's working in this positive feedback loop where engagement goes up, ad pricing goes up, and more people are coming to Meta's platform. So we think that's kind of the core driver of the thesis, but we do see other platforms like WhatsApp, for example, and Threads with a greater monetization outlook over the next 2-3 years. And so we think that, again, there's kind of room for growth outside of the core businesses. And then we also think within the next 2 to 3 years, as this CapEx cycle kind of dies out and maybe fades, that you'll see an inflection in free cash flow for the company. That's been one of the kind of big overhangs, is the the amount they're spending on CapEx. But eventually we think that plateaus, and then you'll see an increase in free cash flow in the next few years.
And then if you could, with these two other names, maybe slightly shorter snapshots just for timing purposes, but Interactive Brokers, it's surprising when I look at how international it is, and I know you also like the fact that they're very tech focused. Are those sort of the main reasons?
Yeah, absolutely. They have one of the easiest APIs, which basically allows you to connect your brokerage, if you're from overseas or from Europe, into Interactive Brokers trading system and get up and going very quickly. And it's a top tier system. And so we think international is very low penetrated right now. We think it's a great area for growth. A lot of international investors want to trade on US markets, and Interactive Brokers is one of the easiest ways for them to get access to that. So it's got some of the highest margins in the industry, and a very good tech stack that allows them to go out there and take market share.
All right, Justin, we'll wrap it up there. Thanks for your overview and drilling down on a few companies for us.